Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar's upward momentum has come to a pause after taking the challenge at that key level and also the broader call of 67.45 as profit taking seems to be emerging. Any pullback likely to find support around 66.85 or down towards 66.40, which could see a correction and break through the level of 67.45 and on towards 68 cents. Here in the US, trading activity remains somewhat subdued as investors exercise caution ahead of this week's pivotal inflation data release, which is anticipated to influence global markets heavily. Meanwhile, the action begins with the US Federal Reserve Chairman Chair Powell as he kicks off his Tuesday testimony before the US Senate and House of Committees on Tuesday, followed by the House Financial Services Committee on Wednesday. Meanwhile, in Australia, the economic calendar remains somewhat light, although all eyes will be on the US inflation report later this week to clarify the US Federal Reserve's potential actions on interest rates. A lower than expected CPI number might prompt the Fed to signal a rate cut in September or possibly later this month. Moving on to the euro, we can see the market has also found a little bit of profit taking in front of that key level, which is around 108.3040. Now, if the market does weaken, which is not expected as the trend is still relatively firm, could see a breakthrough 108.3040 and on towards 109, and with the support holding somewhere around 107.3080 region. The dollar yen case, well, the market has rejected that key level, which is seen at 160.2030, and from the bounce is now tackling the level of 161. Given the fact that the technicals have somewhat buckled, it is too soon to abandon this bottom side level of 160.20, as a break here could give a significant downturn and lead on towards the uptrend seen around 158.2550. The sterling also found profit taking as the shooting star comes in, and now maybe questions whether we've seen a top or not around that 128.45.55 level. But that being said, the trend is still somewhat strong, so therefore we shouldn't abandon the level yet in case we see a surge on towards 129 and support seen now around 127.65. After Friday's rally, the bears returned and erased the gains from the key area of 2,390, but finding support now around the level of 2,360. I like the way this pattern's holding, and therefore we shouldn't abandon the upside. If we do see a bounce, could see it tackled towards that top side level around 2,378.81 or on to 2,400 and reassess from there. Wrapping up with oil, the market was somewhat weaker as it now slips towards 81.5. Given the heavy technicals, I feel there could be further weakness and looking towards a region of 80.40.60. Now a break there would give further scope and see a significant downturn towards 77.40.80. So keep an eye on this level around 81.5 to 80.5 and reassess from there in case we do see a bounce. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the day.